Our conditions bullish in this bull market. Bull market rank is sitting at 26.90. Still a little bit of weakness here, even into some of the strength that we've had recently. We're just not seeing a large pop on momentum, seeing fading really every day as markets are being sold into. Also seeing the breadth indicator giving a little bit more bullish confirmation, but not a lot. And sentiment is also continuing to improve, but not at the levels it had been at within the most recent few months or so. If we jump over and take a look at the buy-sell ratio, continuing to see it strengthen slightly. We're right at 1 right now, so you can see that the breadth is really not biased effectively one direction or the other. Currently just kind of stagnant at these levels. We're seeing S&P 500 also showing some resistance right around these levels. You can see these black candles, which means that we get an open and then it trades lower during the day. Okay, so we're opening and we're selling most of those days. So we'll see if we do get some another open retracement, if we retest these levels, or if we're going to just hold this range. We got a nice bounce around that 572 range on S&P and a little bit of a topping right there at resistance. So range bound currently with a little bit of a bullish bias right here at these levels. We are at the upper end of this trend, and the markets have also been at the upper end of a really long 2-year bull market, and we could be starting to see some weakness. We are seeing a little bit of weakness here in the sectors. If we jump over and take a look at that sectors perspective, we've got 3 in the buy range. The bulk are in these hold ranges and a couple in sell or down trends currently. We're seeing commodities continue to be impressive here. Silver, most of these, well, gold and silver both having a few days of consolidation now inside of this range after some big moves higher, and gold holding really tight inside that 250 to 254 range. USO fell off the table yesterday, continuing to see weakness in oil. Let's jump out to that 1-year time frame, and some discussions about too much supply out there. So we're seeing just that supply-demand shift. Oil continued to show some weakness here currently. Let's jump back over to indexes and talk about bonds. This really is a discussion point going forward. Let's keep a close eye on these. As we're seeing, we're almost back to where we were really before any anticipation of rate cuts. So bond market is still concerned about inflation and interest rates, and continuing to soften at these levels. TLT, the long bond, as well as short-term SHY. Let's see if we hold up here at this 82 range. If we continue to slide through these areas, stocks are going to start paying attention to this and anticipate that there is other information that is coming down the pipe as far as inflation and interest rates. Those are really the game when it comes to the bond market currently. Let's jump over and take a look at some muscle stocks today. IGMS, top of the list right here. Pretty volatile name, working its way towards that momentum zone and around that $17 price point. Another stock to consider here is HYLN, which is a relatively low price stock, $2 stock in the auto parts space, showing some support right here around that 250 range and holding into that momentum zone. Not massive volume on this increased confirmation bar, but showing some strength in that zone currently. That'll do it for today's update. Everyone have a fantastic day today.